One of our listeners asked a very good question. What does Coinbase report to the IRS? And this is a tricky question. This is a tricky question because, first of all, there are two ways that Coinbase reports things to the IRS. First of all, they issue to the IRS in January the following year, they issue what's called a 1099. It's a formal IRS document that notifies the IRS in a standard format that your name, your address, your social security number, and what was paid to you. There are roughly 20 different forms of a 1099, depending upon the nature of the income. The second type of way that Coinbase reports to the IRS is via court summons. All right, so the IRS at this point in time has filed summonses, legal demands to all exchanges operating in the US, and they have demanded all your transaction history from the beginning of your account. That also include any identifying KYC information that you provided. So at this point in time, you should assume that the IRS has all your trading history from US exchanges. That doesn't mean all your trading history, because when you trade it to a hard wallet, when you start trading on an DeFi directly off a blockchain wallet, if you start trading on foreign exchanges, the IRS may not have all of that, although it may have some foreign exchanges. So IRS has a lot of data. They potentially have more data than they can handle, and it's only going to get worse. They're going to get more and more data. At this point in time, of the 1099s that Coinbase provides, they provide only one type. It's a 1099 where they report pretty much your staking rewards. They are not reporting your crypto gains. Coinbase, in particular, took this position. Not all crypto exchanges have taken that position. Some crypto exchanges, like BlockFi, Uphold, uh, Robinhood, have been reporting all your crypto trading. There are regulations being proposed by the IRS right now, which will probably go into effect starting in January of 2025. The IRS may start demanding a full 1099B, which is it's called a DA, 1099 DA, digital assets. It's going to be much like a 1099B if you've ever traded on a brokerage exchange, where on a brokerage, say I bought the Apple stock for this price, I sold it for that price. Here's how much the gain is. So they'll be able to report that level of detail only if you bought and sold it on Coinbase. Right. So there is a question there about consumer behavior. So with this new regulations, the IRS is expecting to get much more documents. I was at a meeting with the IRS commissioner here in the middle of October of 2023, and he presented, and also the project office presented. They're expecting to get 8 billion with a B 1099s generated from these are 1099 DA, digital asset income statements. That would be coming from not only your crypto exchanges, your DeFi exchanges. Anybody touching crypto in the US is going to have to file one of these. It remains to be seen if it's outside the US. Now, let me put that in perspective. Currently, all the 1099s of all different types that there are only represents 2 billion 1099. So this one type of 1099 is going to generate basically another 4 times amount of volume. I mean, this is staggering. And there's going to be a problem the IRS is going to wrestle with is duplicate reporting. Okay. So anybody who has a hand in moving that coin may report something, but just because it's all reported doesn't mean it's income. All right. So the IRS is going to have to struggle through too much data to figure out who it is they want to audit to make sure they did the right number. Now, the IRS has tools. They have Peter Thiel has a company called Palantir, which is an amazing company which takes diverse sets of data, harmonizes it, integrates it, and creates relationships that can start to identify, how much they can try to identify how much income they think somebody had, then comparing it to their tax return to see if they haven't been reporting it. Now, the big point is the IRS knows that about 75% of all crypto owners aren't reporting anything on their crypto tax return. So it's really going to be like, we know you had this much income and you said you had nothing. All right. So that's the person who's at greatest risk. If you've been reporting nothing for a few years, you know, your tax returns are like digital fingerprints. I mean, you can't go back and change them after you file them, and they'll indict you from the past. What can you do? Well, the first thing to do is make a commitment to yourself to get current and get compliant. Make next year, 2024, a year that you're going to file an honest tax return, a complete tax return reporting all your crypto income. At the same time, call our staff. We can calculate your crypto gains for the multiple years that you've been filing. We can tell you whether you really owed money or not in those years. That'll help us understand what the risk is for not having reported, and then start to lay a plan in place for helping you, especially during a bull market. You have some funds you can generate to pay past taxes before the IRS comes looking. If you pay it before the IRS comes looking, you can avoid the 20 to 40% accuracy penalty. And our staff can help lay out a strategy to move you towards compliance and sleeping better at night. We actually do a unique underreporting test. We actually look at all the 1099s that have been filed on your tax year, and we can add them up and we can compare them to your tax return and let you know if the IRS sees more income than you reported, because that's a surefire sign that you're going to get audited for underreporting. You want to report at least as much income as the IRS knows about, and we test that on a monthly basis and let you know about it. It's like the smartest thing you can do if you're a crypto investor. And we have 4 different membership levels depending upon your risk aversion. This is going to become a big area of risk for all crypto traders. These 1099s are going to smoke the animals out of the woods. So keep yourself safe and contact our offices. Thank you very much for listening to today's show, and I hope you enjoy it. Please give us comments. We would love to respond to any questions you give us. You have tax questions that we can apply to. We will try to address it in future shows. Please hit like, subscribe, follow. Thank you. Have a great day.
The Clinton Donnelly Show, where we explore how taxation and regulations of cryptocurrencies affect your daily life as an investor. Clinton has a law degree in international financial regulation. He is an enrolled agent and certified as a cryptocurrency anti-financial crime specialist. He has clients in 71 countries. He is one of the top experts in crypto taxation in the US. This show is sponsored by CryptoTaxAudit.com, the income tax experts for US crypto investors. Are you frustrated with using online crypto tax services to calculate capital gains? Are you a high-frequency trader, DeFi, NFT, play-to-earn, or whale investor? Nothing is too complicated for the experts at CryptoTaxAudit.com. Are you frustrated that your accountant doesn't understand crypto taxes? Crypto Tax Audit uses a proven, bulletproof crypto tax return methodology to prepare a tax return that doesn't attract the attention of the IRS. Crypto Tax Audit also offers an exclusive audit defense membership service. It's like car insurance for your tax return. If your return gets selected for an audit of crypto reporting, they will defend you at no additional charge for the entire life of the audit. No one offers anything like audit defense membership. Go to CryptoTaxAudit.com to learn more and schedule a private tax consultation now. The opinions expressed in this show are not legal advice. Tax and regulations are complicated. Your situation is unique, so you should always consult a tax professional.